Welcome back to the Deep Dive. Today we are focusing our attention entirely on Merck Co. We're doing a deep dive into their latest corporate results, the ones for the third quarter of 2025.
That's right.
And our goal here isn't just, reading off numbers. We want to cut through the data, really give you the shortcut to understanding the key strategic decisions, what's really driving growth.
And spotting the big moves.
Yeah.
Some of them may be a bit hidden.
Exactly, the moves they're making for the future.
And if you just want the quick snapshot, the top-line story, Q3 2025 was, well, exceptionally strong for them.
Okay.
Worldwide sales, they clocked in at $17.3 billion.
Wow.
Which is a 4% nominal increase compared to Q3 last year, about 3% if you adjust for currency swings.
Mm-hmm.
But honestly, the real headline, especially I think for shareholders, is the profitability metric, that non-GAAP EPS.
Right, non-GAAP EPS. We hear that term a lot. Maybe just quickly, for listeners who aren't tracking pharma accounting day to day, why is that number earnings per share, excluding certain one-off charges? Why is that the one we should really zoom in on here?
Good question. Because it's basically the cleanest look you can get at their core business performance. It kind of filters out the noise.
Like acquisition costs and stuff.
Exactly. Like massive one-time acquisition costs that can really skew the picture in any given quarter. And for Q3 2025, that non-GAAP EPS just soared, up 64% to $2.58 per share.
64%. That's huge.
It's incredible. And that surge, it really highlights not just, solid sales, but excellent operational execution. Primarily, it seems, driven by their core oncology and animal health businesses.
Okay, so let's unpack this a bit, starting with the strategy. The big picture. Yep. CEO Robert M. Davis, he's been signaling, maximum aggression in the pipeline, hasn't he?
Absolutely. He talked about advancing the strongest and deepest pipeline in recent memory. And we're talking about roughly 80 phase 3 clinical trials currently underway.
80. That's just a huge volume of work.
It is. And crucially, it's backed up by a massive commitment of capital. Merck isn't just, talking about future growth. They're literally building it.
Okay.
They announced plans to invest over $70 billion in U.S. manufacturing and R&D starting this year, 2025.
$70 billion.
Yeah. That's the financial muscle they're putting behind what they expect to be over 20 launch opportunities in the next few years.
$70 billion. That's an enormous number.
Yeah.
I mean, beyond just funding the trials themselves, where is that money actually going? Is there any risk they're overextending themselves here?
Well, it seems like really strategic spending. It's designed to secure the supply chain, particularly for their next generation of biologic drugs, the complex ones, especially in oncology.
Oh.
So it's an investment in capacity, sure, but also in supply chain robustness. Makes them less vulnerable. And, focusing capacity within the U.S. also probably serves as a bit of a strategic hedge against geopolitical risks.
That makes sense.
So I wouldn't see it as overextension, more like a long-term play to make sure they can actually scale up these huge franchises, both the current ones and the ones coming down the pike.
Got it. And speaking of future focus, let's talk about an acquisition. The one that actually closed just after the quarter ended in October, Verona Pharma.
Right, Verona.
What exactly did they pick up there, and why is it seen as such a big deal, a priority?
The priority here is clearly bolstering their respiratory and cardiopulmonary portfolio. That's an area they're pushing into. The core asset they got is OH2-VER. The drug name is ensifentrine.
OH2-VER, okay.
And it's really compelling because it's being described as the first truly novel inhaled maintenance treatment for adults with COPD, that's chronic obstructive pulmonary disease, in, more than 20 years.
2 decades, wow.
Yeah. And COPD affects millions of people globally, so a genuinely new treatment mechanism that represents a potential multi-billion-dollar commercial opportunity pretty much right out of the gate. It's immediate portfolio diversification for them.
Okay, now here's where we hit that interesting detail, the aha moment maybe, hidden in the accounting. If you just look at the Q3 financial statement, the non-GAAP R&D expenses actually decreased by 32%. Compared to Q3 last year.
Right.
Now, wait a minute. You just told us they're chasing their deepest pipeline ever, investing $70 billion.
Right.
A 32% decrease in R&D. That sounds like cost-cutting, not, aggressive investment. What are we missing?
That's a really crucial question. And the answer, it lies in understanding what gets classified as an R&D expense in these quarterly reports.
Okay.
These numbers, they often include significant one-time non-recurring charges, usually related to acquiring pipeline assets like buying another company or a drug candidate.
So comparing Q3 '24 to Q3 '25 is really apples to apples then.
Exactly, that's the key. In Q3 2024, Merck booked charges that totaled a massive $2.2 billion.
Related to big acquisitions they did that year, like iBio and another asset, MK-1045. Now, fast forward to Q3 2025, and those kinds of charges were just vastly lower. It was primarily a $300 million milestone payment they made to Lenovo.
Okay, I see.
So while the reported charges dropped dramatically, the company actually confirmed that if you exclude these big one-off payments, the underlying spending on clinical development, on running those 80 trials, on actual discovery R&D, that's increasing.
Got it.
You really have to look past the sort of acquisition accounting noise from last year to see the real investment trend. That $70 billion commitment, it's definitely active.
That distinction is incredibly important, yeah,
Okay.
for anyone trying to figure out the company's real trajectory. Okay, let's pivot now. Let's talk about the absolute cornerstone of their current revenue, oncology.
KEYTRUDA.
KEYTRUDA, embrolizumab,
Yeah.
still the industry giant, right? Sales hit $8.1 billion in Q3 alone.
Still growing, too. 8% growth ex-FX, 10% nominal.
So where's that growth coming from? Is it just more patients overall? Well, KEYTRUDA's dominance is, frankly, staggering. But the story isn't just about treating late-stage metastatic cancer anymore. That's still key, of course. Strong global demand there, especially in things like urothelial, endometrial, gastric cancers.
Right.
But increasingly, the growth is being fueled by moving into earlier-stage cancer settings, what they call adjuvant therapy.
Treating after surgery to prevent recurrence.
Exactly. And there's been really robust uptake there in cancers like triple-negative breast cancer, cervical cancer, renal cell carcinoma, RCC, and non-small cell lung cancer, NSCLC. Treating patients earlier, well, it gives you a much longer potential revenue runway for the drug.
And the innovation isn't just in which cancers it treats, but how it's delivered, which has huge implications, right? For patient quality of life, clinic efficiency. I'm talking about the FDA approval of KEYTRUDA QLEX.
Yes, the subcutaneous formulation.
Subcutaneous, meaning under the skin.
Right, an injection. This is a major operational game changer. Historically, KEYTRUDA was given as an intravenous or IV infusion.
Yeah, sitting in the chair for a while.
Exactly. Tethered to an infusion center chair for, a significant amount of time. KEYTRUDA QLEX, this subcutaneous injection, apparently it can be administered in as little as 1 minute.
1 minute versus, 30 minutes or more for IV?
Potentially, yeah.
Yeah.
Think about the impact that has. Drastically reduced chair time in busy clinics. Potential for maybe shifting administration out of just hospital settings eventually. It means increased access, increased convenience across all the solid tumor types where the IV version was already approved.
That ease of use has to be a huge competitive edge too, right? Especially as more competitors are starting to emerge in this space.
Absolutely. It's a significant advantage.
Okay. Now, KEYTRUDA is clearly the headliner, but we shouldn't ignore the really impressive performance of another oncology drug, Welireg, or belzutifan.
No, definitely not.
Its sales growth was really notable this quarter, spiked 41%.
Yeah, Welireg's success is a great example of sort of portfolio synergy playing out. It's currently approved for certain types of kidney cancer and also tumors linked to a specific genetic condition, von Hippel-Lindau disease.
And the momentum is coming from new data.
Heavily supported by strong clinical data updates, yes. From combination trials announced just this quarter, we saw promising top-line results for LIGHTSPARK-011, that's Welireg, combined with another drug, Lenvima, for advanced RCC, and also LIGHTSPARK-022, that's Welireg, paired with KEYTRUDA itself, used as an adjuvant treatment for RCC after kidney removal. And that trial met its endpoint for disease-free survival.
So Welireg plus KEYTRUDA.
Looks like a powerful combination setting up to potentially rule the renal cancer space together.
Interesting. Okay, let's move out of oncology for a moment. You mentioned portfolio diversification earlier. Let's transition to maybe the most explosive product story this quarter, Winrevair. So tadalafil, Circus, and Cardiopulmonary.
Yes, Winrevair, the growth is just huge.
The numbers certainly back that up. Sales were $360 million. You said huge growth. That's a massive 141% increase.
141%, yeah.
What's the actual clinical significance here? Why is this drug being adopted so incredibly fast?
So Winrevair treats pulmonary arterial hypertension, PAH. which is a really severe, debilitating disease. Basically, the blood vessels in the lungs constrict, get tighter, leading to very high blood pressure in those pulmonary arteries.
And that puts a strain on the heart.
Exactly. A huge strain. Historically, patients with PAH, especially severe PAH, they faced a pretty rapid decline, often needing a lung transplant eventually, or, sadly, leading to early death.
So what changed recently? There was an update to the label.
Yes, and it confirmed its really life-changing potential. Based on data from the Zenith trial, the FDA updated the indication, the approved use. And it now specifically includes reductions in death and the need for lung transplantation for adults with PAH who are at high risk of mortality.
Wow. Reductions in death and transplantation need.
That's huge. This isn't just about, managing symptoms better or slightly improving quality of life. This drug is now proven on its label to extend life and keep these very high-risk patients off the transplant list longer.
That's incredibly powerful.
Absolutely. Being the first PAH drug indicated for those kinds of hard endpoints, that is a massive driver for global adoption. Doctors want to use something that shows that level of benefit.
Okay. Now, for every soaring success like Winrevair, there can be headwinds too. And it looks like the biggest headwind they faced this quarter was in the vaccine division, specifically Gardasil.
Yes, that was the main drag. Gardasil and Gardasil 9 sales, they declined sharply, down 24% to $1.7 billion.
24% is a big drop for such a major product. What happened?
The sources are pretty clear on this. The primary cause was significantly lower demand in the Chinese market.
China.
Yeah. On top of that, sales were also a bit lower in Japan. That was due to the expiration of reimbursement for a specific catch-up vaccination program they had run previously. But the China impact was the main driver. If you actually exclude China, the decline was much more manageable.
Still, that highlights a potential vulnerability, doesn't it? Relying so heavily on one specific market like China for a cornerstone vaccine like Gardasil, does that pose a long-term strategic risk?
Well, it certainly underscores the risk of concentrating too much in single major markets, yeah. And I think that's precisely why we're seeing Merck being so aggressive in building out their next generation of vaccines. They're actively trying to diversify their infectious disease revenue and do it quickly.
Okay, so let's look at those newer vaccines then. What's happening there?
Right. So CAPE-VXIV, that's their pneumococcal 21-valent vaccine. It launched back in Q3 2024. This quarter, it brought in $244 million.
Okay, decent number.
Yeah, reflecting continued uptake. Plus, the expected seasonal inventory build as we head into the respiratory season. And it also recently got approval in Japan for adults at increased risk. So good progress there.
And the RSV vaccine.
Inaflancia, that's their RSV prevention product. It generated $79 million this quarter. Mostly that seems to be initial stocking in the U.S. market ahead of the actual RSV season kicking off. And significantly, it just received a positive opinion from the CHMP in the European Union.
CHMP. That's the committee that advises the European Medicines Agency.
Exactly. So a positive opinion usually means European regulatory approval is likely just around the corner. Another market opening up.
Okay, good momentum on the newer vaccines then, even with the Gardasil dip. Let's look even further down the pipeline now, thinking about future value beyond the current big sellers. What other key research wins are emerging? I want to circle back to Cardiopulmonary because you mentioned it earlier, and there seems to be another huge story brewing there.
You must be referring to enlicitide dekinase.
That's the one.
Yeah, this is potentially the biggest breakthrough in managing cholesterol, well, maybe this decade. It's an investigational oral PCSK9 inhibitor designed to treat hypercholesterolemia, high cholesterol.
Okay.
And the big news is the Phase 3 Coral Reef Lipids trial just announced positive top-line results. It apparently met all its primary and key secondary endpoints.
Why is an oral PCSK9 inhibitor such a big deal? What's the context?
Okay, so context is key. Right now, patients with very high cholesterol who need the potent effect of PCSK9 inhibition, these are usually high-risk patients. They have to rely on injectable drugs.
Right, the self-injections every few weeks.
Exactly. And those injectables are incredibly effective, no doubt. But they often require special handling, refrigeration.
Well,
It often means clinic visits or just a higher burden of self-management. That can be a major barrier for patients sticking with the treatment long-term.
so an oral version changes that.
Fundamentally, an effective, simple-to-take, maybe once-daily pill that completely changes the treatment paradigm. It could move this powerful class of medicine out of just specialized cardiology clinics and into the hands of, say, the average general practitioner. greatly increasing access and adherence for millions of high-risk cardiovascular patients.
That does sound massive, a potential game changer for heart disease prevention.
Potentially, yeah.
And what about infectious disease? Anything notable there, particularly in HIV?
They did announce positive 48-week phase 3 results for a new combination regimen. It's a once-daily oral 2-drug regimen, doravirine paired with ilatravir. This is designed for adults whose HIV is already virologically suppressed, meaning the virus is under control. And the key takeaway from this trial seems to be that the regimen showed minimal effects on weight gain and lipids, like cholesterol.
And why is that important?
Because as people live longer and healthier lives with HIV, these long-term metabolic effects, weight gain, changes in cholesterol, they're becoming increasingly important considerations for patients and doctors when choosing a lifelong therapy. So minimal impact there is a plus.
Got it. So we've got successful launches like Winrevair, strategic investments like the $70 billion, positive pipeline data like enlicitide, and the HIV combo. Connecting all these dots, what does this mean for Merck's financial outlook for the full year, 2025?
Well, they clearly feel confident enough based on this performance. They actually raised and narrowed their financial guidance for the full year. That usually signals increased confidence.
Okay, what are the new numbers?
Full-year revenue is now expected somewhere between $64.5 billion and $65.0 billion, so tightening the range upwards slightly. And non-GAAP EPS was also raised and narrowed, now expected between $8.93 and $8.98 per share.
So the market should probably see this as confirmation, right? That
Yeah.
the growth engines KEYTRUDA, these new launches, they're successfully offsetting those headwinds we talked about, like with Gardasil.
That seems to be the message, yes. The strategy is working as planned, or maybe even slightly better.
Okay, finally then, to wrap up our deep dive today, looking ahead, what are the key sort of regulatory milestones, things that we, the listeners, should maybe keep an eye on through the first half of next year, 2026?
Yeah, there are a few important dates coming up. Keep an eye on the oncology pipeline, especially early next year. We have some key PDUFA dates.
Right, PDUFA, that's the FDA's deadline to make a decision on a drug application.
Exactly. So we're looking for decisions on a couple of KEYTRUDA combination therapies. There's one called Keynote B96. That PDUFA date is in February 2026. Another one, Keynote 905, is in April 2026. And crucially, that oral 2-drug HIV regimen we just discussed, doravirine/islatravir, its PDUFA date is also coming up, April 28th, 2026.
So February and April look like key months next year.
For sure. Those decisions will all serve as pretty significant catalysts for the company and the stock. So if we try to synthesize, the overall narrative from this quarter, what's the big story? I think it really is one of aggressive and quite deliberate portfolio transformation.
Yeah.
Merck is making these massive upfront capital commitments at $70 billion for R&D and manufacturing we talked about. They're strategically acquiring key assets like Verona Pharma. It's all about aggressively building the future portfolio, making sure they can absorb those expected declines in some of the older franchises like Gardasil. It feels like a transition, but one they're guiding from a position of strength.
And for me, what really stands out is also this shift in accessibility. It's not just about the science. You see the incredible strength of new launches like Winrevair, growing 141%, but also the strategic move of a cornerstone drug like KEYTRUDA into that subcutaneous 1-minute delivery system.
Right.
It shows a commitment not just to groundbreaking science, but also to actually improving how patients access care, making healthcare delivery more efficient. It's practical innovation, too.
Well said.
So what does this all mean for you listening in? Well, given that striking success we heard about with the oral PCSK9 inhibitor, enlicitide, meeting all its phase 3 endpoints, it really makes you wonder, doesn't it? What does the prospect of an effective, simple-to-take oral pill for high cholesterol mean for the future standard of care in cardiovascular disease, especially in an area where complex, temperature-sensitive injectable therapies are currently dominant for the highest-risk patients? Could this mark the beginning of the end for injection dependency in some major areas of chronic care? Definitely something to mull over until our next deep dive.